All right, everyone, it's Josh Taylor, and I want to welcome you to another exciting episode of the Forex Market Preview. And I'm your host, Josh Taylor. Hey, we're going to be looking at today's market preview is going to be less of a preview. It's going to be kind of a mixture of preview and review. I want to talk about some of the current trades that we're in, some of these trades we've been in since mid last week for my customers, my Pro Signals direct clients, and Mirror Trader customers. And some of the trades we have pending, we've been sitting on for a little while, and I want to give you an idea of why we're taking some of these trades and what I'm looking at on the chart, so that you get a better understanding. I mean, we get so many emails on a daily basis that hey, I understand that we're taking this trade, but why are we taking this trade? So I want to get a little bit more in depth in what I'm looking at on the charts, so that you guys can learn as I'm going through the process and sending you signals. The goal is ultimately for you to learn how to trade for yourself. So the first trade we're going to look at right now is a trade we've been in for since last week. That seems to be hesitating and really not doing much. And it is the USD yen. So the first thing I do is always look at the weekly chart. I never trade off the weekly chart, but the weekly chart at least gives me a long-term perspective of where this pair has been, what it's working on. There's some help me with market direction, looking at the trend. Are we sideways? Is the trend up or trend down? And you can see here that the USD yen has basically been in a sideways channel, went up. We did have a significant pullback, and I'm guessing that is a 70. Yeah, it's a 79% retracement right on it. Perfect. Look at that. From that swing low to the swing high, it actually pulled straight back to the 79% retracement and went into a sideways channel. This 77-73 line is obviously over weeks and weeks and weeks is the extremely solid support level. I want to make sure I mark that off on my chart. 77-73. It's not going to be on my daily charts yet because we're not down that far. But that's something to keep track of. As if the price would ever pull down to that level, we are going to have a significant pullback on that level. So anyway, price has been working its way back up. You can see it's kind of turning right here. It's working its way back up. Last week we had a pull down, but pretty much the last couple of weeks it's been riding in this channel. In fact, like if I go to a daily chart, you can see that the price has pretty much been going sideways. Let me zoom that out. For the last couple of weeks, it's been kind of moving through this little mini range between 80.50 and 75.50. Okay, about a 77.50. I'm sorry about that. So about a 300 pip range that this pair has been moving in since about May. So we've been running in this 300 pip channel. And price has since then been just slowly but surely moving up. It's been trending up if you look long term, starting around last October of last year. That its pair has been moving up. It moved up significantly, it came back down, worked its way back to this trend line, and this trend line is continuing to hold. So that trend line is not going to help me in the current trade that I'm in. But remember that we talked about in the weekly chart that this 77-73 level was the 79% retracement of this upswing. All right, and then it's just holding the base at that pullback. So if you convert that over here, 77-73 would be right here. Right? I can't get that perfect. Actually, I can. 77.73. And you can see that if price would pull back on this pair, this is a daily chart, a good couple hundred pips, if this thing would run all the way down, we would have what's called a confluence of events. I want you to look at the screen and I want you to think about this. A confluence of events. So what is a confluence of events? That is where multiple events happen at the same time. So not only do we have a solid base at the 77.73 off of the weekly chart, but we also have, it is a base of this trend line that has held pretty dang strong for a year. Okay, it obviously break above it, but it came back down and it's holding as a solid support. So what happened if price would drop down 200 pips right here, down to around the 77-73 area? and it's give or take, 20, 30 pips when you're talking about daily charts. Um, we're talking about two key levels converging at the same time. All right, for a huge opportunity for a buy, especially if U.S. data coming out is still bullish. Okay, so let's talk about the current trade that we're in, and I'll show you what I was looking at. I'm going to pull these charts back a little bit. I know you can't see them very well, but we're going to squeeze our way in so that we can start looking at key levels. The first thing I always do in my charts is mark off key levels. Now, how do you mark off key levels? Well, it's pretty simple, guys. This is kindergarten work here. You can see there's a top right there. You can see right here. See that level right in there? How it's priced for several days. Now, each one of these candles is a day, but priced for several days. Zoom that in more. Oops, that's just too much. But price right in here. Boom, 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 boom. Support. And before it broke through, support. You see what I'm saying? That's a key level. So I'm going to delete that now because obviously we're not anywhere near that price. You don't need to mark every single key level on your charts because obviously you'll have so many lines you can't keep up. But you can see in here that price, we had a key level here, a price rejected here. Here, this is the 79.50 range, and here, all through here, you can see how it hesitating and struggling in there. I'm going to zoom in more. All this in here is a key level ish. Now, what I mean key level ish, which means that it broke through a little bit. It is this in this range of 79.50 to 79.20 was a key level that price had serious difficulty breaking through. So it became a support level at one point and then broke through and became resistance. Broke through, became support, broke through, and now it hit and became resistance. So what we did is I waited for price to pull back up to this level, because right now what we're looking at is price has been slowly uptrending, and then it got more aggressively uptrended, and it is still uptrending. Okay, so here's what we got. How do can you tell an uptrend from a downtrend, from a sideways trend? Uptrend, you have higher lows and higher highs. Low, high. Higher low, higher high. Higher low, higher high. Even low, so we have what's called a double bottom off of this daily chart. And then see this pin bar right here? Pin bar, essentially what you would call a doji. But first of all, see how price on this day came down, came close to this level-ish, right? It can be anywhere in here. And rejected strong. You see this wick? What that means is price really kicked off that thing and rejected, shot back up. Price worked its way down like it always does, came down, and yesterday closed this candle out with what's called a doji. Okay, you can see this. What this means is price was balanced out. This is a sign of indecision in the market. So when price has been going down, 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 and you see a doji, it's usually an excellent sign for a price reversal, as is a pin bar. Okay, and we'll find some pin bars here later on and show you that. But a doji is an excellent opportunity to see that. So we've been in this pair actually for a few days, and we're looking for price to go up. Now today there is in the U.S. and in Canada is a bank holidays, so that the market is really just moving slow. So what I did is since this level is held so strongly at 79.50, and then I marked off this other significant level, which is 79.20. I put a stop below this level, which obviously is a double bottom level, and made sure that the level was deep enough that to give the market some room to breathe. Now, I know a lot of people like to trade with 20 pip stops, and when you're trading off the 10-minute charts and 15-minute charts, you can use 10 to 20 pip stops. We're looking at longer term runs on these pairs, and so right now on this trade we are looking at, because it is continuing to move higher and higher, and now as it says hesitation, I expect it to continue moving higher, that we put our stop below this level, strongly below this level, down to 78.80. Okay, we put a 70 pip stop, and our profit target is what is it, 80.80. So we're actually looking at a 130 pip move up So our reward to risk is almost 2 to 1. It's about 1.75 to 1, which is still excellent. But the last couple of days, honestly, the price is just kind of sitting and hesitating. It is down a few pips, which is fine. If it's down 14 pips, it's not a big deal. But this level has continued to hold strongly. Now, if this level breaks, I may close the trade out early. I don't believe in getting completely stopped out. But I do believe that the USD, especially against the yen is weakening across the board right now. So anyway, that's what we're looking for, and we're looking for this price to run all the way up to the 80.80 range and take us in, keep us in a good position. I'll show you one other thing. I'll just look at something else I noticed in the 5-minute chart where we're at here. Now, I only trade the 5-minute chart for taking the short-term scalps, but you can see that we are also on the daily pivot. Right now, it's actually broken slightly below the daily pivot. It's 1 pip below the daily pivot. So it's right at the daily pivot, which is a strong. All right, the Aussie dollar, US dollar, one of my favorite pairs to trade. I'm still very confident in the weekly chart. First of all, look at where we're at long term. You can see that this pair is pretty much, we have a solid base level here. Okay, you see, it's very easy to draw these lines, guys. You see, look where price is rejecting. You can see right in here that we have a base, at least recently. Solid level up in this range, but we aren't anywhere close to getting up into that range. But you can see that even over the last I don't know, a couple months, that this key level here has held pretty strongly, which is approximately the 0624 level, and we have a solid base here. Oops, I don't want to do that. It's going to mess up everything. Let's draw another line here. You can see that we have a base here. Okay. So we have some solid. We're basically range bound right now, and I would consider an upward range bound, because it is still continuing to move up, but it is still in a range between these two levels here. So let's look at the daily chart. You can't see a lot on the weekly chart on this. On the daily chart, you see long term that this pair there's a couple different trend lines that we've drawn out here, and this pair is held pretty straight to these trend lines. This is more of a long-term trend line. This is going to hold a little bit more immediate because of where it's at. But basically, we'll zoom this in here. We got into this trade at 0380, which is right here, a solid level. Actually, I took 2 trades off that. I closed out some profits and then I re-entered the trade again. And the price came down. We have a 50 pip stop. So our stop is below this level here, which is also a support level here, and it's also below this trend line that is kind of squeezing its way up. This little mini wedge. It's within this wedge. There's a wedge within a wedge, and so what we're looking at here is price just what it did today. Shot up almost 80 pips. 60 pips. We're about 60 pips right now. In fact, we just closed out 50% of our positions. Moved our stop up to 0390, so we are 10 pips in profit. So even if the trade would go against us, we are 10 pips in the money, and we would at least get stopped out in additional profits to protect any downside from the trade. But what I am expecting is that this pair is going to continue to go up almost to the 0550 range, and I do believe we have our take profit at 0480, and then we will be looking for potential bounce off this trend line, which has held pretty strong for quite a while. But ultimately, that's what we've got going on right there. Up 60 pips on that trade. Let's see what else we got moving on here. Let's look at the pound yen. And the pound yen is. I was expecting this trade setup to take sometime later in the week, but it actually took 1 day to hit. Here's what yesterday price was all the way up to this range. Was at the 126 on the daily chart. Let me look at yesterday. Let's look at yesterday. Price was up around the 127 mark, and it's been working its way down. Okay, we hit a double top. Price rejected, dropped down. But we have this little trend line over the last month or so has really held pretty strong, And I looked at this and said, okay, if this thing is continuing to go up, look, we got a low, high, a high, a higher low, a lower high, but higher low, and then it went back up, broke beyond this 124.50 range, and it's slowly but surely working its way up. You can see low, high, low, high. It's working its way up, up, up. It's not too difficult to draw out a channel and realize that this thing is somewhat channeling an uptrending channel. Okay, so we were looking for a pullback. Now remember, when we are in an uptrend, you want to buy the dips in an uptrend. So when a pair is moving up, we want to buy the pullbacks. Okay, so you're literally buying it against the market for a pullback. And on a downtrending market, you want to buy the rallies. If a pair is trending down, you want to buy the upshoots. Okay, and so I was looking at this, and I didn't think it was going to happen this quickly, but I sent this trade out yesterday to our Pro Signals direct customers, and then we put the trade in also for our Mirror Trader Pro customers, and it got taken in this morning. We bought at 126.08, which is about right now, considering you have to add spread into your broker's dealing desk. So we just got into this trade just a little bit ago, actually, and prices come right down to this level, right down to the support level. Okay, now the pound has been gaining strength across the board somewhat, and the yen, I see huge. I'm expecting weakness on the yen pretty significantly. So what I'm looking at this as a corrective measure, and that over the next few days we'll have a pull up. So here's what I did on my stop. Now on this trade, I took a pretty significant stop level. In fact, let me look at my notes here, because I don't have it drawn out on here. Oh yeah, 124.60 and 129.50. So 124.60. Here's what I saw. I saw we have this trend line support level here, right? So what we're trying to do is make sure that we protect this trade as much as possible on the downside. So I realized that this would be an excellent place to get into the trade at the very bottom of this trend line, and it'll also be more difficult for the pair to blow through that. At the same time, we have a key level ish, okay, right around this area, the 12500 mark. And so we put our stop level at 124.60. I gotta bump this here at 124.60. So it is a big stop. I usually do not trade with 140 pip stop, but we're looking for a run up to 129.50. So we're looking for a 350 pip move on this pair. Though it has had a significant pullback, they always have significant pullbacks, right? Look at this. This pair is moving up, up, up. When you take a short-term look at this picture, it looks like, oh, this pair is moving down, right? Let's look at like an hourly chart, for example. What's that look like to you? This trade is going down, 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 down. But that's why you have to use multiple time frames, folks. Okay? On the hourly chart, you can see that this trade on the daily chart, that this thing is moving up, and it has been significantly since June. For the last 5 months, it's going up, up, up. There's always pullbacks. Price never shoots up like a rocket. See, it went more aggressively up here and also came more aggressively down. Nice aggressive move up. It's been aggressive move down, aggressive move up. This slowly moves, and that's how the currency markets move, folks. Okay, it's been working its way up. So we want to make sure we're buying we want to reduce the stop and widen the profit target as much as possible to increase the potential of gains. So we bought right on the trend line, knowing that it had to, 1, break the trend line, 2, it had to break 12500, 3, it's buying right at the figure 12600. So we have a triple confluence of events, right? And number 4, this trend line that has been forming here at the bottom too. So 1, we have it for a support level. 1, we're at 12600. There's 1. 2, we got this trend line here. There's 2. 3, 12500 figure. Oh, no, sorry about that. Yeah, the 12500 figure. So we have three levels. Sorry about that. I was thinking that our stop was down here. But the stop is right here. So we have three levels of support that we would have to break. Okay, one is the fact that we're right at the figure. The price tends to like that. What I mean by the figure? Rounded numbers, guys. Look, 12900, 128's in there, 127, 126, 125. If you look at these, let's look at like 127. Let's mark 127 off. Do you see anything significant about 127? Look at it. Look how price hesitated. And zoom that in. See how it struggled at that level? The figures, especially on pound and euro trades, but for the most part, all trades, but pound and euro trades especially love hitting the figure. But look how powerful that is. Boom, 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 boom. Okay? So we bought this pair at the figure, knowing that we have that to break through, the 125 figure to break through, as well as this trend line to break through for the trade to go sour against us. Now, I'm not going to allow myself, if the trade pops down through significantly, depending on the momentum, I may close the trade out early. I've risked 1% between 140 pips, which means if the trade goes goes for me, I'll actually gain about 2.5% on this trade. But I will not allow this trade to stop out at 140 pips. I'll close out way before that. But anyway, that's an idea of why we're taking that trade. Now, one thing I want to take a look at is the Euro USD. Okay, now we're not in a Euro USD trade, but I do have a couple of pending trades sitting here waiting. Let's show you what we're looking at here. So let's first start with the weekly chart on the Euro USD. And we actually closed out a pretty significant amount of pips on this trade in two different positions. But you can see here that the pair has basically been going sideways for quite some time. This is, a good year you're looking at here. We had a nice run up. Price really struggled here at the 1.3 mark and is now working its way back down to this 126.63 mark. So I want you to mark off this 126.36 mark. This level, because it is a significant level. Now these are huge drop downs when you talk about the number of pips, but you can see that it's still a solid support base. Support, resistance. Now we're expecting a support, so I am expecting a bounce off of this level because this level has been so strong, and we are less than 100 pips away from that level. So here's what we did, and you start looking at the average daily range of this trade. Well, actually, we'll get back into that in a minute. Let's look at the 1 hour chart, and we'll talk about the average daily range. Okay, which let's see if I actually have ADR actually put in here. I don't. Okay, we'll get into that. Okay, so what we're looking at on this pair is the pair is moved up, went to a sideways channel for almost 2 weeks, and now we're seeing weakness across the board. Now, long term, we're looking at this pair has been holding strongly at this trend level, which is not a significant level because it's significant enough that we will see a bounce off of this level. So this level right here is about the 127 mark. Okay. No, actually, 126.11. I'm sorry about that. 126 higher, a little higher than that. 126.63, 36. My gosh, guys, it's been a long day. Okay, this is around the 126.36 mark, which on the weekly chart, if we showed you before, is a key level. So this is a key level. We're very close, about 80 pips away from hitting a key level. Now so we have one event for a potential bounce. Okay, 2. This is also converging with this downtrending trend line. Okay, which is held here, held here, and it's slowly but working its way down. In fact, I'm expecting it to touch this trend line and continue shooting down. So we're looking for a level of bounce. Now, third confluence. I drew it a Fibonacci level. In fact, let me delete the Fibonacci level. And you'll see that from this swing low to this swing high, that this level right in here is the 50% retracement. Now the euro loves taking little bounces off the 50% retracements and the 62% retracement levels. So we have 3 levels of convergence sitting here. Price is working its way down. Then I'm expecting a counter trend off the daily chart, that is, a counter trend bounce. Now, is it counter trend? The one thing you need to look at is this could be just a retracement. What we're in right now could be a retracement of what was already going on in this this rally and this pair. So price could hit and literally shoot straight back up. What I expect to happen is we're going to get a bounce up, which will take a significant amount of pips off of, and then price will break down through. And if price breaks down through, we'll expect a retest, which will sell short again here. So that's what we're looking at in the euro. But we also, because of the fact that this euro is downtrending, we took a trade at 28.30, closed out the position in 2 separate pieces, got 85 pips on that, did well. And so we are looking at the looking to resell at the 28.30 mark, which is right below this level. So I put 2 trades in. I put a buy position and a sell position. I put a sell position here at this really strong level. 28.30 is actually where I put the sell, which we already took a trade on. And if price would rally back up to this level, because we are downtrending right now, I would basically take that as a selling opportunity. And if the price continues to push down, I'm expecting a bounce off of this 120, right above the 12600-ish mark. Okay, so that's what we're looking at today, guys. I hope this helped, and just make sure you leave your comments underneath this video, and I'll be glad to answer them.